Hello and welcome. I'm Matthew from Rosie and Rosie, investment property specialists helping you invest in property with confidence. It's the middle of October 2021, the middle of spring, which is traditionally a good time to be selling a home. But if you've sold a home in the last 12 to 18 months, it probably hasn't mattered all that much because we have and continue to witness one of the hottest markets that Adelaide has enjoyed in quite some time. The sales market is hot and the rental market is hot. And if you're in the market to buy or rent a home, you would know this all too well. Stock is low and demand is high. Open inspections are busy. Days on the market are low. Auction clearance rates are high, and homes seem to be selling well over the advertised price guide. People are often asking me, what can I do to improve my ability to buy a home or rent a home in the current market, to which I currently or usually respond with, be prepared, get pre-approval so that you can make your offer quickly and with confidence, or if you're looking to rent, have your application ready and complete and ensure you submit everything the agent's asking for, and again, do it quickly. But why is the market so strong at the moment? Especially given our international borders are closed and the population hasn't really grown. According to the Australian Bureau of Statistics, in the year ending 31 March 2021, Australia's population grew by just 35,000 people, about 0.1%, and Adelaide's share of that was just 2,700 people. So where is the demand really coming from? Anecdotally, we've witnessed a large increase in people attending open homes and auctions, and many of them referring to a move to Adelaide from interstate, often from Victoria, where they've been in a lengthy lockdown period, suggesting that maybe the ABS data isn't entirely up to date. When we look at the ABS methodology for calculating population growth and population movement, in between census, the last one being 2016 until the one that we did just this year, what they do is use calculations to estimate the movement and growth of population, and part of those estimates come from Medicare address data. So I wouldn't be surprised if once they get through the data that came out of this year's census, we see a revision in those figures. But even with population movement taken into account, there are other fundamentals which are having a great impact on demand, and in particular interest rates. Money is cheap to borrow at the moment. The Reserve Bank hasn't increased the cash rate for nearly 12 months, and it currently sits at just 0.1% or 10 basis points. And so banks are offering variable rate loans with under 2% interest in some cases. If your mortgage is not under 3%, maybe speak to your lender or broker. But additionally, the bank's lending criteria has softened somewhat. You may have heard under the changes recently announced by APRA, the Australian Prudential Regulatory Authority, banks will soon be forced to use a more cautious interest rate assumption when assessing customers. So there's a thing called a serviceability buffer that currently sits at 2.5% above the actual rate of the loan. And the serviceability buffer will soon increase to 3%, which will certainly reduce the amount that many people will be able to borrow. But this comes after years of being 7%. So most borrowers who looked at borrowing 2 years ago or longer, and haven't done so since, might find that they're still better off. But lastly, one factor that I think doesn't get discussed enough is people's deposits. With lockdowns and travel restrictions and working from home, social distancing and masks and vertical consumption, people are spending much less money, and they're saving a lot of that money. If you ask or know anyone in hospitality or the tourism industries, just ask them how they've been affected during this COVID period. And with borders opening up, I think this factor alone could be one of the most significant ones to impact the property market. With people being able to travel and more likely to be working back in the office, getting those daily coffees and buying lunch out every couple of days, I think we'll see those savings start to get spent, which is great for the economy. But yeah, I think it will have an effect on people's deposits. So I'll keep an eye on that one. But yeah, that's it for now. If you're interested in catching up to talk property over a coffee or a beer, please shoot me a message or give me a call. But until then, I'm Matthew from Rosie and Rosie, helping you invest in property with confidence.